Let's talk about the child benefit rider and how that plays into infinite banking. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. I teach people how to live and leave a lasting legacy through infinite banking. And I'm going to be very transparent here in my own experience as I talk about this child benefit rider, because I've been implementing infinite banking for going on 10 years now, and I recently made this change to a policy that we've had for 9 years, and it's this child benefit rider. So let's talk about what the rider is, what its implications are for those that are implementing infinite banking, and then I'll, of course, share some of my own history to be an open book for you. So the rider itself may or may not be attached after a policy has already been issued. So when I say a policy, I'm talking about a properly structured whole life policy from a mutual company that pays dividends. So the type of policy that someone would be procuring for themselves to implement infinite banking as a process. But this may be a policy rider that you can attach after the policy has already been issued. Such is the case with the company that I have recently applied for this particular rider with. So this rider is going to cover children, and every company is going to be a little different. Every rider might be a little different to be familiar with what you have or what you could have, whether that is on an existing policy or on your next policy purchase when you're implementing infinite banking, because that is the ultimate here in implementing infinite banking, is to build a system of policies over the course of time. As of today, I own 7 policies, and I'm just now adding this rider to a policy. So here we are. And it can only be added to one policy with this particular company that I've applied with. I own multiple policies from that company, but I can only request this rider on one policy because it will cover all of our children. We currently have 3 born. 4th one is on the way. Later 2025. Can't wait. Incredible. And then, of course, that will be time to get another whole life policy once that child is born. So we're super excited for all the right reasons. But this child benefit rider will allow you to pay a premium for the rider, to be able to have that rider. And there's even some flexibility in how much you can pay, and it will determine how much coverage you get. Like there's a dollar amount that if you pay that amount, you can get another $1,000 in term coverage per child until they're at age 22. And again, here's where some of the data points may be different from company or policy or rider options. Where it's 22 years of age with one company, it may be a different age with another company. It might be 25, might be younger. Also, whatever the premium amount is, if I say, well, it's $130 to attach this rider to this policy with this company, that could be different than a different policy or company. So be aware of that for yourself. I decided to get the maximum coverage that we could, which, just to give you an example and be transparent, was going to get $20,000 in term coverage per child. And the cost of the rider, $130, correlated to that maximum amount. It would have been less per year to have that rider attached to the policy if we wanted less coverage, but we wanted the maximum coverage that we could get for our children. So we wanted to pay the full $130, get the $20,000 death benefit coverage for each of our children that is going to last until age 22 with this particular company, particular rider, particular policy. Age 22, $20,000 in coverage, and at the time of either one or two things happening, either when the insured, so this policy is actually on my wife, so either by the time that my wife turned 65, which is going to be too far out, that's not going to happen first in our case, or the child reaches age 22, that's when you actually have an opportunity to convert that term coverage and a multiple of it into whole life insurance. So that $20,000 death benefit can convert to a whole life policy at either of those times, whether the insured turns 65 or the child turns 22 years of age, up to 5 times that original amount. So $100,000 of whole life insurance death benefit will be available to us per child as they turn 22 or the insured turns 65 in the future. So again, every company is going to have their language and their stipulations. It's a policy, it's a contract, so be familiar. But a insurance company can offer you this rider on adopted children, stepchildren, biological children that you have, as long as they are 14 days old or older. And of course, there's going to be a limitation on how old they can be. So with this particular company, it's to age 18 till adulthood that this can be added to a policy, or also before the insured turns 55. So this rider can actually be attached to a policy on someone who has no children currently. But by having that rider attached now, it will be in place in the event that that insured person does end up having children. And it wouldn't matter how many children they had, because all of them would be covered under that rider. So again, with this particular company, the range of coverage was from $1,000 as a minimum to $20,000 in term coverage. And the overall cost of that coverage increase as you move from the minimum to the maximum. And again, interestingly enough, this is an option as a rider to be added after a policy has already been issued. Now, let's talk about the implications for those that are acquiring policies for the purpose of implementing the process of infinite banking. What this child benefit rider is allowing you to do, number one, you're of course protecting your most valuable asset, the important people in your lives. Beautiful. If you're thinking long range, like Nelson encouraged us to do, that's just a prudent move. Nelson did talk about the importance of having coverage, protection, death benefit. 2, you are acquiring the opportunity and the contractual right to be able to convert that low-cost term coverage that's getting you protection now into a larger footprint of whole life insurance premiums that you can pay in the future, cash values that you'll be able to build, dividends that you'll be able to earn, access to capital that you'll be able to have by having that new whole life policy. Because when you make that conversion from this just being a rider on an existing policy, it will become a new policy on that individual child. You're going to have access to capital via policy loans on a brand new whole life policy that's going to have the death benefit beginning at $100,000. If I'm still using the example of the maximum that my wife and I got for this rider for ourselves, we're going to be able to get another $100,000 in death benefit on each of our children, which again, when you remember that Nelson says that cash value must eventually equal whatever the death benefit is, if the starting point of that new whole life policy is $100,000, obviously that can grow because of dividends and how we treat the policy and use the policy through infinite banking. Taking policy loans, recapturing debt, or financing things for ourselves, paying that back, plus additional PUA premiums into the policy, that can result in bigger dividends. So it can grow the footprint that we have and will have. I hope that you're understanding what I'm saying there. The death benefit that we have in a system of policies can go up. The cash value can go up. We can stand to earn more dividends and therefore do more infinite banking. It's a beautiful addition to what for us was already a significant system in our lives of 6 whole life policies, 1 convertible term policy, totaling 7 policies for us. Now we're adding this rider onto our system that's going to allow us with 4 children in the future to be able to add another $400,000 total to that bottom line of the death benefit that Lauren and I are building for those future generations. And then inherently, we're going to be enhancing our bankability with this system of policies that we're creating. Now, quick note with this particular company, and again, there may be other stipulations, but with this particular company, you cannot acquire this policy rider, this child benefit policy rider, if you were acquiring a single pay whole life policy. So it wouldn't be eligible in that case, and that's worth note. And then two more things. One reiteration, which is if you are young, don't have children yet, this is really a nominal expense, if you want to call it that, because there is premium to pay to acquire such an opportunity for yourself. You can go ahead and be setting yourself up to be positioned to utilize this policy. But again, and every company may be different. With this company, it is a rider that is possible to add after the fact. And I'm very grateful that we were able to do that for ourselves. And then let me go ahead and emphasize the importance of proper structure on policies. I don't have a cookie cutter approach to custom building policies for folks that are implementing infinite banking that work directly with me. And we are constantly dialing in our system. I've been very open and transparent here by saying we've been doing infinite banking for 10 years and we're just now adding this as a step in our own process. So I'm saying that to say that at the time of conversion, let's say in the future, we're now much more aware of what we can do to properly structure those future whole life policies that's currently term coverage on our children by also adding other riders that will enhance the usability. I mean, whole life insurance really is portrayed either as this plain Jane, simple, vanilla, boring product. And then other people out there, of course, will say it's just a money grab from the insurance companies. I am more and more impressed with the versatility of a properly structured whole life policy from these mutual companies that pay dividends. They really are the foundation in our personal financial paradigm. And I would encourage you to keep learning about whole life insurance and how it can be structured in a way to help you accomplish so many things in life. I mean, there's guaranteed insurability. That is a rider that can be attached to whole life policies. There are waiver of premium riders. There are term insurance riders that might behoove you to add to what you have going on. So in looking ahead at the time of conversion, when you go as each child is, let's say, turning 22 years old, or you're going to turn 65 and it's time to do some converting, at that time, that policy can even potentially have more riders attached to it so that it's properly designed for your intended purposes, whether that is a waiver of disability. In the case you're disabled, you could have premiums waived, or whether it's guaranteed insurability on this young child who, let's say, is just turning 22, there's a guaranteed insurability rider that could very much benefit that individual to have. So what I love about this rider and us attaching it to our system is that we have more protection now, and in the future it means more banking ability for Lauren and I. And then, of course, ultimately, because we already have policies on all of our children, so we already have the insurance on them that we were able to get on them. So at the time that we got the first run of policies on each of our minor children, we got as much insurance as we could on them. They were built for infinite banking, but we got as much insurance as we could get on them at that time. And what this rider does is it guarantees us an opportunity in the future, again, to have more protection now, actually, because of this term insurance. And yet, at the time of conversion, this is a contractual right that we are going to have to expand that footprint of death benefit that we have, and then therefore inherently the cash value that we can be building through those new whole life policies. So just knowing that we've already acquired that opportunity into the future on top of what we've already done with the whole life policies that we already have on them, it's just ratcheting up, dialing in this progression towards thinking long range, capitalizing, preparing for windfalls in the future. So many different principles from Nelson are being lived out by us, by me getting a policy on me, then getting a policy on my wife, and paying off debts and financing family purchases and business purchases and living expenses, just different things over the years, and then acquiring whole life policies on our children, then getting more term convertible term coverage on me to acquire more of my insurability. Now adding this child benefit rider, which gets us more protection today and more possibilities in the future because of that convertibility into more whole life policies in the future. It's a beautiful thing. These are valuable assets. It matters where they come from, how they're built, and most importantly, you knowing how to use them. If you would like to have a private consultation call with me to evaluate what it is that you are already doing and how you can level that up, I'm always ready for those conversations. Look forward to those. I've had some great follow-up consultation calls this week with folks that have been doing infinite banking for 3 months, 2 years. It's been a lot. It's been fabulous. I love celebrating financial wins with folks and helping navigate through financially tough times. Folks lose jobs. Things happen. They have to adopt grandchildren as children. Lots of things happen. But all that to say, to have a private consultation call with me to begin the journey of infinite banking, you can find me at durhamtalents.com. Live and leave a lasting legacy. If you enjoyed this topic, consider watching the next recommended video for you. And you can connect with me at durhamtalents.com. Live and leave a lasting legacy.